Welcome to our outsourced and supplemental trading panel. For those whom I don't know, my entire career has been with Boston-based buy-side firms in various trading roles. Now I'm focused on my consulting and expert witness business, where one of my offerings is advising both the buy and sell side on supplemental and outsourced trading. You might be thinking, why did CAPIS propose this webinar? Well, simply they want to discuss the evaluation and implementation of outsourced trading and ask me to moderate it. In my view, any discussion around effective trading must be driven by the asset manager's investment process. And a strategic needs assessment is where most firms start. I call this the why. Some in the industry still think outsourced trading is an all or nothing decision. Many challenge this and look at the decision from a different perspective. I currently have two buy-side clients who leverage the supplemental model. This is not an either or, but it is an and. And what I mean by this is that the existing internal trading desk works in conjunction with the outsourced provider in a scale up and scale down capacity. The outsourced provider is an extension of the existing effective trading desk. The goal of today's panel are to touch on the why and the how, provide an unbiased discussion of outsourced trading, and as the moderator, this will not turn into a CAPIS advertisement. And please think of outsourced trading as a best execution as a service concept. Post this webinar, you'll receive a follow-up outreach and with a link to this recording and our contact information. Today, Matt Krebs from CAPIS and Colin Kelly from Signia Capital will share their views. Matt and Colin, could each of you summarize your background, please?
Sure. Thank you, Jeff. I'm glad to be here. I'm Matt Krebs. I joined CAPIS as the Director of Outsourced Trading in 2018, where I lead the trading side of our offering. Prior to my current role here in Dallas, I spent 15 years on the sell side with positions in both institutional cash equities and sales trading in New York and Chicago.
Yeah, and morning, Jeff. I'm Colin Kelly, Signia Capital, portfolio manager, principal. We run two strategies at Signia, both long-only focused, small cap and a small micro cap. And we've been utilizing outsourced trading for approximately 5 years, so pre-pandemic. So we've had a lot of experience with it and happy to share our thoughts on it.
Perfect. We're fortunate to have both of you on today. So Matt, a question for you to start off. How did we get here? And can you offer a brief history on outsourced trading?
Sure. In its infancy, outsourced trading was most often associated with emerging hedge funds or spin-outs, where a trading solution was a natural extension to augment other prime brokerage services such as cap intro, research and corporate actions, and obviously technology. Essentially the idea of creating a hedge fund in a box. Over the past decade, however, pre-COVID to current, we've seen a real growth in demand for outsourced trading solutions that has permeated into the more traditional asset managers, such as family offices, endowments, foundations, RIAs, and even pension funds. People often cite headwinds such as cost pressures associated with fee constriction, regulatory demands, and a shift from active to passive as some of the initial catalysts behind this expansion across asset managers. But I do believe that over time, it's become more strategic in nature, particularly when you look at the supplemental solutions and their increased prevalence in the marketplace. Today, to coincide with this increased demand, you're seeing an increased number of outsourced trading providers. To put some numbers behind it, according to Coalition Greenwich, as recently as 2018, I believe there was maybe 10 providers in the space. You look today and they're stating that that number is closer to 45 or 50. So that's definitely quite an increase over that period of time. When you look deeper into the market segmentation of this increased number of providers, it can broadly be cut into thirds. You have your legacy prime solutions. You also have custodial and independent. And obviously, each of these sleeves come with their own distinct characteristics, which I believe reflect the wide demographic of the asset managers that are looking at solutions.
Perfect, Matt. Thanks for that walk down history lane. And I do agree, the three different types of providers out there, custodian, prime, and independent, all have their strengths, and it's really interesting to see the competition in the marketplace, to see these different types of providers and what they offer and the solutions that they can bring to their client base. Correct. Colin, so turning to you, As a portfolio manager leveraging outsourced trading services, can you share what you value in trading first, and then reasons why you decided to move from an in-source desk to an outsourced solution?
Sure. I mean, what we value in trading is execution, and we've seen that from our outsourced trade desk. There's a key man aspect to it. Having an internal trade desk, you're kind of susceptible to one individual, whereas having an outsourced trade desk, you have a lot more capacity to grow. If we want to get into new markets or new geographies, we can also do that. And so we've seen basically trading as a service is the way that we would characterize it.
Okay, no, that's helpful. When you say you value the execution, what about the information flow that comes within, the trading dialogue? How do you look at information flow? And was there any change to the information flow from when you had an in-source desk to this outsourced solution?
Yeah, I think that's one of the main concerns when you have an in-source desk is that you have a trader that you can go to, you could talk to, you can have a relationship with, him and her, or, maybe if you have a small team, you feel like that is kept in-house for lack of a better term. And then when you start to bring on an outsourced solution, you have to build that relationship and that rapport. And so for us, I think that was our, there were a number of questions that we had when we transitioned to outsource, but that's a softer side of trading that we needed to get comfortable with. And that's developed over the last 5 years, and quite frankly, happened sooner or in a quicker fashion than I had expected. So we see our outsourced trade desk really as an extension. And as I said, from a key man perspective, we had one in-house trader, and there's significant risk around that. We operate in a small market. An outsourced trade desk gives us global reach. And so that's a huge advantage for a smaller boutique firm like ourselves.
So do you feel with the outsourced relationship that you have that you're actually punching outside of your weight class on service, execution, liquidity access, and information flow?
Yeah, I think we do. Certainly from a market standpoint, as I said, we run small micro cap strategies. And so our trading can be very delicate. And so, over the last 5 years, we've done TCA analysis, we've done third-party analysis versus our peer group. And I'm happy to say that, time and again, we're top quartile, top decile. So it's very, very encouraging.
No, that's good. And, when you think about those different strategic reasons that a firm may, consider either supplemental, which is at incremental, working in conjunction with the existing desk, or the full outsourced, business continuity. You touched on, key person risk, this technology, compliance. You touch upon geographies or different asset classes. Some of them may not be applicable to your current business model, but is it fair to say if you looked at other asset managers that have more convertible focus or derivative focus, that this also could be a solution for them?
Yeah, I mean, that's what I was referencing when I said trading as a service, is that, Amazon and Microsoft have, created the cloud, which lets you leverage your business as you scale. And today we're a 2-product shop, but I don't feel that we're limited on the trading side as far as our growth is concerned. If we wanted to go into new products and new markets, we could. Yeah.
The scalability is interesting. Thank you.
Yeah.
Appreciate that, Colin.
Yeah.
So Matt, bringing you back into the conversation, after your, close to 15 years on the sell side before you moved to the outsourced responsibility, how was your trading different now when acting as an extension of the buy-side desk versus representing the buy-side desk?
Sure. First and foremost, you're a step closer to the investment process. As opposed to kind of seeing trades from the periphery, you have a front row seat. You now work in close conjunction with the portfolio manager. There's a deeper understanding of the overall book where I know what the team values and how they manage their strategies. And with that, naturally, I think comes an added layer of collaboration with the investment team. As opposed to an order hitting your desk, oftentimes I find myself engaged in conversation with portfolio managers well before a trade goes live, discussing pre-trade analysis, what might be the optimal execution strategy, liquidity constraints, all those things that help guide bringing a trade to life. Beyond that, from an execution standpoint, I feel that the skill set of a buy-side and sell-side trader are very similar. But where the real difference lies is in the tools with which an outsourced trading provider has. My platform now as opposed to a standard sell side desk, I have access to essentially liquidity anywhere. On any given order, I may be looking to tap hidden liquidity and buy side crossing networks, different dark pools, and even accessing high touch natural liquidity from counterparties across the street. And another added component that I find very exciting is the fact that for our managers, we're able to trade both for attribution or anonymity. And that anonymity component can add a tremendous amount of value for a manager, particularly like Colin, where they trade very illiquid securities and information is critical.
Perfect. So just to clarify on attribution, what do you mean by that? And our viewers may not be familiar with how that phrase is tied into, the outsourced and supplemental.
Yeah, that's a great question. A major component of the role of my role is to help manage the commission budget. There are counterparties and services research that they consume to help generate their strategies. As such, through trading revenues or trading commissions, I should say, you are paying counterparties across the street for those services. When you execute a trade for attribution purposes, the trade will come from our desk, but the underlying client is known and they get credit for the trade. So it's whether the underlying client is known or not to the end counterparty on execution.
Perfect. No, I appreciate you clarifying that.
And Jeff, I might just jump in there from our side, where Matt was kind of talking about, sending trades to various brokers for research and other things, is that we've utilized, paying soft dollars through a third-party administrator. So our outsourced trade desk does all the execution. We share in that commission and then pay out that commission through our third-party administrator. And, that kind of gets into our, from a compliance standpoint, we can track exactly who we're paying, as opposed to, previously with an in-house trader, we had an in-house trader who probably had 15 to 20 relationships who we had to make sure we're sending trades to the appropriate brokers, given the research. And, I think we're doing a better job now tracking who we're paying, how much we're paying, what kind of research coverage we're getting. And then you add the bundle on top of that we're getting, great execution on an outsourced basis. I can tell you from a PM perspective that it's made our jobs a lot easier. It's less time consuming.
So operationally, what I'm hearing, Colin, is CSAs via a supplemental or outsourced provider is making it easier. What about the quality or access to research? Have you seen a change there?
No, none whatsoever. That's on our side to foster that relationship.
Mm-hmm.
I know that, candidly, when we get calls from sales traders, they don't like to hear that we're cutting checks. And necessarily, I know that they'd love to get the volume. I mean, they're happy to get paid otherwise, but I know that they'd love to have it run through their desk. But I think for our clients, what is best is, one, get the execution, and then two is to pay directly for the research. And so I think we get the best of both worlds. And I think a lot of sales traders have converted to being more accepting of cutting checks. It really kind of puts the onus on them to bring ideas to us that are actionable. And so we found it to be really productive, and that the street's been very receptive to it.
Perfectly. So I'm hearing from a Signia perspective, it's a win-win-win. And what I mean by that is it seems like you value the anonymity, you value the operational access and the CSAs managing, reporting, all that. You also, value an effective way to pay those research providers with, for the services that they're giving you.
Right. And I would also say from a compliance standpoint, when, we look at our chief compliance officer says, who are we paying? How are we paying them? We go right to the third party administrator. It's right there. It's easy to track.
Okay, perfect.
Yeah.
So Matt, bringing you back into the conversation, we talked about strategic drivers for outsourced trading, and we also talked about reasons that some may consider supplemental or just kind of the broader education around outsource. Before we wrap up today, can you speak to some of the misconceptions regarding outsource and supplemental trading?
Sure. I think the biggest misconception, and we've touched on it a couple of times in this discussion, is the notion that it's an all or none proposition, right? Yes, there are fully outsourced trading engagements where a provider will be involved for the full life cycle of the trade. However, that's not always the case. Outsourced trading the aim is to augment, expand, and support existing workflows and trading capabilities, not necessarily to replace it. So again, I think that once folks wrap their head around that idea that, you know, it doesn't need to be an all or none, people are more open to the idea.
Yeah, and we touched upon the three different types of providers earlier, right? The custodians, independent,
Right.
and prime focused. All of them bring something different to their clients, challenges and the solutions that they collectively can achieve together.
Yeah,
And as I mentioned earlier,
I'm sorry, and I just say to back that up, I also think that the idea that it's not a one size fits all solution, right? No two asset managers are exactly the same. As such, no outsourced trading solution is exactly the same. The backbone to any successful outsourced trading engagement is having a full understanding of how the manager runs their business and what's paramount to them. An outsourced trading desk needs to be agile and agnostic in terms of workflows and technology to support these existing processes, not aim to simply replace.
Yep,
Yeah, and I can go. I was just going to say, I totally agree with that, Matt, is that when we started this process 5 years ago and looking at different providers, we had an established, I guess, technology stack within the firm. We had a portfolio accounting system, we had an order management system, and we looked at all outsourced trading options. And at the end of the day, we wanted to make it as seamless as possible. And so those providers that said, well, that might work, we can't have it might work. We can't have that. It has to work 100% of the time. And so that was a real deciding factor for us. So from the outsourced trading provider perspective, being agnostic to the technology that an in-house a manager has on the portfolio management side or on the portfolio accounting side is very, very important because that was, frankly, one of the biggest pain points that we wanted to avoid in this transition was that we'd have to implement new software, new hardware, because in the transition, what we were actually trying to do is trying to eliminate hardware on site, eliminate software on site, and on top of it, it allowed us to leverage as we wanted to grow that we didn't have to invest in, more servers and software. So the technology component was a big, big portion for us. And at the end of the day, being a portfolio manager and partner and running the business, I'm also not, chief technology officer. So we need it to work all the time. That can be a huge pain point and a reason not to go with somebody.
Colin, thank you for adding that on.
Yeah.
As I opened up today's call with, when anyone considers getting educated in supplemental or outsourced trading, it has to come down to what's the investment process, and is this accretive or is dilutive to that investment process? And Colin, it's, Signia took a very interesting approach. You initially looked at it from a trading perspective. That's anonymity, liquidity, the measurement around liquidity, and then the payment cycle to fulfill the research commitments, et cetera. But I'm hearing from this conversation is you went much wider, enterprise-wide. So compliance, technology, business continuity, and execution. So it's that continuous life cycle of that trade idea and all the needs around that investment process.
Right, and that allowed us to really consolidate all of the things associated with trading. I mean, we were getting, TCA analysis, transaction cost analysis from a provider. We had software vendors coming on site to talk with us about, the latest trading software. We had obviously IT staff associated with, making sure our servers were running and all that. And all of that was consolidated and has really been, put to a broader, deeper outsourced relationship. So I think from, I touched on it, but key man, infrastructure, cost. I mean, those are big components for our business, and then we've gotten great execution on top of that. And that was key. Obviously, with Matt talked about it, there are more providers today. So I feel like even 5 years from now we have even more options if we weren't getting the execution that we wanted. So that we could, plug into somebody else very, very quickly.
Perfect. And, I open up with best execution as a service. I truly believe that. And you think about scaling, you use the Amazon example, scaling up or down from a chief technology perspective. The same concept can be brought into the supplemental landscape. Scale up or down with the needs. It could be by asset class, geography, business continuity. And it's not an all or nothing. It's an or an either or. It's an and that's the key part of it. So to wrap up today, I want to thank both of you for your time and insights and see if either one of you had any final thoughts.
I would just say, I'll go first, Matt, if you don't mind.
Sure.
I would just say that Matt mentioned earlier, I think just, putting the PM hat on here is you worry about, the trader and the execution and if they understand the intent of your trade. For our product, we run a fully invested product. And so we're always balancing cash and buys versus sells. And so it's very dynamic, as I'm sure a lot of firms are as they trade. And I think, the relationship that you build with your outsourced trade desk is a softer side, but it can be a very valuable side. Matt mentioned earlier that he feels like an extension of the investment team. We feel like that's true with our outsourced trade desk, that when we come to them with either a new buy or something that we want to get out of quickly, or maybe it's a name that we want to work. Names come, I guess, in different shapes and forms, and I feel like our outsourced trade desk really understands our philosophy around trading and how we want to execute it. There really hasn't been a day where we received the allocations at the end of the day and the trader didn't do what we intended. And so for us, we feel like that that execution, that consistency, as Matt said, it's really an extension of the portfolio management team.
Perfect. Thank you, Colin. Matt, any final thoughts?
I quickly wanted to touch on something that I think is not discussed often, but I find to be exciting and compelling. It's the personnel nature and the makeup of what today's outsourced trading desk looks like. When I got into the business, it was you were either a sell side or buy side trader. Today, with the growth in outsourced trading, the dynamic of outsourced trading desks is really strong. You have people with sell side backgrounds, buy side backgrounds, expertise in program trading, international. You're inheriting or leveraging a team that has a really diverse makeup, and there's a lot of hidden value in that. The fact that people have various experiences and can add value in a multitude of ways.
Perfect. Mind share is critical to any
Yes.
successful business, and having folks with different backgrounds and sharing of ideas and professionally challenging each other on how to, provide that customers solutions in different ways is vital. So let's close out there. I encourage all on the buy side that haven't met with any of the providers from a custodian, prime, or independent to really learn the differences between them. It's only going to help the broader conversation within your organization. And it's one of these things that it would be much better to lead the conversation than get directed to the conversation. So I would encourage all to focus on that. Please consider outsourced trading as an extension of the existing trading desk. We thank you all for your time. You will receive a follow-up. And if there's anything else that any one of us can provide on this call, feel free to reach out, and we hope you have a great afternoon.